What is up, everybody? It's Crane of the Creme Investments and Wellness back at you again with another video. And I apologize for the delay of videos. I took a step back from trading for about a month to just deal with some personal issues and then just enjoy time with the family. You know what I'm saying? I usually take December off, but I will tell y'all something towards the end. But for right now, I want to get towards the video. So the only thing that you'll need on your Fibonacci is the 1, the 50, and the 0. So go ahead and draw this out. So these are the only settings that you'll need for how I personally use the Fibonacci, and how I personally recommend the Fibonacci to be used, because it works wonders in this way. All right, so this is all the settings you'll need if you want to follow this kind of, I guess, way of using the Fibonacci tool or the retracement tool. So 0, 1, 0.5. All right, so you can go ahead and delete everything else. Delete up to 68 to 78. You can go ahead and delete all this. I think these are the most important points on the Fibonacci. All right, so with that being said, you'll use that tool to measure price. That's all the Fibonacci tool is used for, to measure price. Just like a ruler, like we use a ruler to measure distance, you use this ruler to measure distance and price, essentially. So with that being said, the upper portion of the 50% is the premium price, and you want to sell price at a premium because now it's worth more than what the price originally is, and vice versa. When the price is at a discount, D for discount, P for premium, D for discount. All right, so once price goes to a discount, you want to buy the price because now price is worth less than the original price. All right, so you're getting it at a discount and you're selling at a premium. That's how you make money in these markets. All right, no matter if you're trading indices, commodities, equities, stocks, doesn't matter. That is how price moves. All right, so that being said, I'm going to show y'all an example here. All right, so, and also the 50% is can be used in both ways. It can be used to sell and buy because that's the original price. That's I mean, it's not either at a premium or a discount. It's just at its original price. I'm trying to figure out what it. All right, so here we go. So as price moves from discount to a premium, so we want to buy at a discount, may come to this 50% because that's the original price. See some kind of stutter, and then once it comes down maybe a little bit, maybe has an order block or some balance in here that it comes to, we then want to buy back up into the premium. And once it gets to that premium, now price is worth more than its original price, so we're not looking to buy it. We'll get cheated out of our money, so now we're looking to sell it. Sell down, and now we get back to a discounted price, so now then we want to buy it, sell it. And this is how a trend forms in the market as price moves from a discounted price to a premium price. All right, so once you get the concept of that, we're going to move to a real life example. So this is I'm actually doing my FOREX funds account right now, so we're gonna go ahead and show the stats on that. So I'm up about 2%. I started it at the beginning of last week, so like six days in. So I'm up about 2%. And I'll show y'all this sale I had on AU right here. All right, so this is the sale I had. So this black line represents the 50%. So from this bigger time frame area interest, that's what we'll look for sales because now it's at its original price, and we're looking for some kind of stutteration to move back to the discount, then back to this original price. I just wanted to show y'all this. And this is the original entry right here at this week. I'll show y'all when we get in. But as you can see, pull back to the 50. TP1 was taken. TP2, this is my gibberish handwriting because you're typing fast. But essentially, fear got the best of me on that second trade. It worked out in my favor, but my plan wasn't followed because this second position right here where I just profited $363 was actually supposed to be a break even because I was supposed to actually let that run till this original or second profit, but I took it all the way out to 3-1. So it worked out in my favor, but didn't follow my plan. So So back here. So profit was taken like right up in there. I'll show y'all in a minute. So that area that I showed y'all right here is this area. Right here. And this area is prime time area because it's New York going into London, or London going into New York, the overlap, which has the most volatility, especially during Christmas time. Because a lot of people say don't start the challenge during Christmas, but with smart money concepts, it doesn't matter. The price is going to react to where it wants to react. It may not have the volatility, which a lot of my trades haven't, because they've been running like 2.5 to 1, 3 to 1, sometimes 2 to 1s. Not the original 4 to 5, the ones that usually run just because of the volatility, because of holidays. But so I'll go ahead and walk y'all through this trade. So as we can see, price tapped into this black line here, this 50%, as price moves from that discounted price back to the premium. So from this discounted price, hold on, let me go ahead and type this out. So, because I know I'm a visual learner as well. So let's go put D for discount. And let's put S for, not P for premium. I think it's about supply. All right, so discounted to premium. All right, so but we do have a reaction once it gets to its original price, because it can be looked at as premium or discount at the 50%. 50% is always crucial. So once it gets to that 50%, we are looking to sell. So zooming in on smaller time frames. So as we see here, we see this order block, this green area right here. This order block right here. And then as price taps into this order block right here. All right, it's 15-minute order block right here. And once it taps into this order block, we have this breaker structure, or flip, or change of character, whatever you want to call it, some kind of break of structure. And as we see, price taps back into this area. Go ahead and put our entry right here. Stop loss right above the order block. Was looking to take profits at this order block down here. However, I take I'll take my first TP is always 80% profit. All right, yeah, 80% of the total position size, and I let the other 20% run. So I took that 3 to 1 right there, spiked in, and then I moved my second position to break even. And then, like I said, I was supposed to let it run all the way down here, but then I seen price starting to creep back up, and fear. Like I said, this is not how you manage your trade. I was supposed to get broken even on this. Where'd it go? Yeah, this position, this trade right here. Supposed to get broken even on that trade, but hey, it worked out in my favor. But I marked the X on my trading plan, because that's not how it's supposed to be followed. But yeah, that is essentially. And another thing. So as it moves from that premium price, it comes back down into the discounted area on the 1 hour time frame. So you have to use your premium and discounted prices with your Fibonacci on different time frames, because as we all know, the market's fractal. What it does on the bigger time frames does on the smaller time frames. So that's essentially why I was looking to take profit down here, because looking back on it, I could have took my profit right here as well, because it bounced back into the 50%. But I was looking for it to come to this order block down here. So because the same thing that's happening on the bigger time frames is happening on the smaller time frames. So that's why I have this Fibonacci drawn on the 1 hour, as it's from this swing high to swing low. And now this is a discounted price right here. And this is at your premium price right here. And as you can see, how price moves the same way. We want to buy at the discount, gets to that premium, sell, comes back to that 50, gets back to the premium, sells, gets back to the 50, premium, gets back to the 50, sells in. It was just I was just seeing a whole bunch of liquidity getting built up, but hey, the market, you never know what the market's gonna do. But you still see how price is moving within that premium and discount, and you can do this on all different time frames. Definitely back test all, and then do the work yourself. That's what makes a good trader. You got to have experience in these markets. That's leading to another thing that I want to tell you. I got to keep it real with y'all. I've lost my FTMO account. Fear got the best of me, and I started revenge trading and blew one of the the daily drawdown limit. Yeah. So yeah, your boy has lost his FTMO account. I had to keep it real with y'all. I don't want to keep any information with y'all. But with that being said, I'm gonna take y'all on the journey with me through this my FOREX challenge. Like as you can see, up 2% right now. Still got a good bit of time left. But just taking it slow, just taking it real slow. But yeah, every time I upload a video, y'all gonna see that as well. Keep y'all updated on that as well, so y'all can go through the journey with me. And I appreciate y'all just rock with me. I really do. I really do appreciate all y'all support. I know YouTube helped me a lot with my trading. I know I say that a lot, but it really did. So I just want to give back and do the same. So appreciate y'all. Crumb is out.